Hello traders, good morning. Good morning, good morning. Welcome to another exciting session here. This is our morning market review, Rally Trade Rally Academy. My name is Emmanuel. I'm glad to be here with you guys. So let me know if you can hear me. Let's do a little sound check. Sorry about the time. Apologies for the time. We said a bit late. But then we have started right now. Okay. So call your friends, family, and everyone well wishers for them to gather here. We're going to have a great time here. We're going to be analyzing the different asset classes. We'll be analyzing from the currency pairs, we enter indices, we do commodities, and all of that, man, as time will permit us. So it's a one solid hour of market analysis. We give you tips and tricks on how to navigate the market profitably. So we run this from 8 a.m. to 9 a.m. in the morning. So in all of this time, we try to tell you how the market is going, okay? So somebody just responded, sound check, okay. So I believe it's the same thing to everyone, right? Sound check, okay. Sound check, okay. Loud and clear. Okay, so let's quickly look at fundamental first before we dive straight into technical. Or should we just ignore fundamental? Wait a minute, how can you ignore something as important as fundamental? So you don't want to ignore fundamental. You also want to you want to check the news activity, the fundamentals. As the name implies, it's called fundamentals. That simply means is the main thing, right? So we want to check where the money will be going to, the what will be moving the market for today, and all of that. So today is Wednesday, a very beautiful day here. So for today we have 12 a.m. President Trump speaks. That's 12 a.m. our Nigerian time, right? So that should be around 6 p.m. The US time. 6 p.m. the US time. So that's a medium impact news. So that simply means our the activity here are divided into two. We have the data news and the non-data news, right? So this one is a non-data news. That means there is no data. So the far right of the so we are using Forest Factory, right? I just shared the screen now before it was not shared. So apologies for that. So this is Forest Factory. So forestfactory.com. For those of us joining us for the first time, it is www.forestfactory.com. So you go to calendar, then of course you see the news activity for the whole week. So we are on 20 Wednesday, as you can see, Zoom right in your face. Wednesday, 24th, all right, of September, right? Okay. So the first activity we have there is President Trump speaks. That's the low impact news. Okay. Then 2:30 a.m. That one has already passed again. CPI for Australian dollar, right? CPI for Australian. Then the rest of the day we don't have any high impact news. So, but we have crude oil inventory, right? Crude oil inventory, right? That measures the inventory reserve in the US. Okay, so if they have more in reserve, it simply means the demand will not be high. But if they have less in reserve, of course, there will be panic buying and all of that stuff. So that's every Wednesday actually. Every Wednesday. So guys, that's also low impact. It always comes out as low impact, right? But then it affects the oil market. So and of course energy market, I mean. So I will just switch over to go straight to the chart and then start analyzing from the chart. So since there is no high impact news for us to dwell long on here, okay? So I will switch over to my chart right now so that you can see how we can start analyzing the chart. So guys, I would like to start from currency pair as we always do here. It's actually a custom, right? To want to analyze the market from the currency pair. Currency pair because just everybody can be able to access that regardless of the kind of money you are trading with, you can be able to trade that, access that, and all of that. Wow. I like what I'm saying, right? I like what I'm saying. So guys, let's start from which instrument should we start from? Let's start from the smallest, right? Let's start from one before we start counting tens. Okay, so let's start from one. So let's do Euro USD. Where's my Euro USD here? So the kind of analysis I do here, the first thing I do is I try to identify the trend, right? So if you have been trading and you have not really been enjoying it, right? You've not been really been enjoying smooth ride on it. Uh, Now, see, when you trade and you make profit, right? When you trade and then you make profit, now, after you make profit, some of your trade will hit stop loss, right? So come to a point where you accept it that some of your trade will definitely hit stop loss. Now, for a new trader, they don't really get to accept that. But then, those of us that have traded for some time now, we have come to the point where we now accept it that sometimes our trade will hit stop loss, right? Now, your trade hitting stop loss does not paint you, right? Does not mean you are a bad trader. Does not mean you're not a profitable trader, right? So what you do is that stop loss that the trade will hit sometimes, it should be a very small loss, right? Small loss, very small enough, such that your winning trade should be able to cover it. That's just the whole summary of trading profitably, right? I'm telling you. Don't say, hey, none of my trade will close with stop loss. Hey, that's not true. That's not true. That's not true. So you have to always put stop losses on your trade, right? And by the way, if you're trading with small capital, and of course, you have access to, let's say, 2 million naira in your account to fund, but then you only have 200,000 naira. No, you're not doing yourself a great world of good, man. So you have access. You can actually withdraw the money and top it up, and of course, trade bigger lot size. If you're trading 0.01, now you can increase to 0.05. If you're doing 0.05, you can increase to 0.5. For 0.5, you can jump into the realm, man, the spiritual realm of a standard lot, guys. So all of that, such that everything remains constant, right? Everything remains constant. You're not actually increasing your risks, right? But you have increased your capital. So one of the secrets of successful trading is maintain a very low risk profile, right? Like trade with a very small risk. Now, but then don't increase your risk, but increase your capital. So there are two different things, right? So increasing risk and increasing capital are two different things. So most person think, hey, I'm increasing my risk if I'm increasing my capital. No, no, that's where most person get it wrong. If you increase your capital, you're not increasing your risk. So by the end of this call, I'll drop my number. If you want to increase your capital, and of course, following the kind of strategy, the things I will teach you here, you can call my line, guys. I will teach you how you can be able to do that. Okay. So I'll guide you through, teach you some personal stuffs. Okay. Personal stuffs. Okay. So let's jump right into it. So this is Euro USD. So the first thing you want to do is you want to go to the H4 time frame. That's the first thing. Why the H4? H4 time is so that we can see the bigger perspective of what is happening in the market, right? I think the last time we actually drew this arrow here, as you can see, the market is still obeying it, strongly moving upward, as you can see right here. So this is still term an upward trend, as you can see on the H4 time frame. Why is it term upward trend? Of course, it's very obvious that it's upward trend because we can see that the market keeps creating higher highs and of course higher lows, right? Higher highs, higher lows, except you just want to maybe not agree with what the market is doing. Of course, you agree with me, this high is higher than this high is higher than this high, this low is higher than this low. That's just the simplest form to identify where the big money is going. So, of course, the market is divided into two. We call it big money and small money. So, if you're hearing it for the first time, okay, write it down. Big money and small money. Okay, so big money is those that use big time frame. Of course, big money means they have bigger funds, right? They are trading with millions of dollars. So small money are those of us trading with hundreds of dollars, right? Hundreds of dollars. so so millions of dollars are big money, hundreds of dollars are small money. By hundreds of dollars, I mean, hey, if your account is 1 million naira, okay, that's just about $600, right? $600. So if your account is about maybe 2 million naira, that's about 1,300 dollars. Okay, so hundreds of dollars. You understand what I mean, right? Okay, so but because at the end of the day, you have to still convert it to dollar at the background. Okay, so guys, this instrument is actually going up as we can see right here. So this instrument is going on. So we are just going to look for an opportunity to want to enter the market, right? An opportunity to want to enter the market. So so that is what we have gotten from the H4 time frame. We've gotten that, hey, this thing is now, in fact, we can even go ahead and do this kind of analysis, but I'm trying to be fast so that I can cover a lot of instruments, right? So you can see this. I picked rectangle here. I had to look towards the left-hand side. So I saw that, yeah, the market observed this place as a very strong resistance, right? But if you notice, the next time it observed that area, it was able to break through it. How did it do it? It broke through that resistance, right? With strong candlesticks. First, one, two, three, four, five. Man, five candlestick all bullish. One, two, three, four, five. In fact, this sixth one is also bullish. And of course, you know, we have six H4 candlesticks in one day. That means the whole day bullish. So that means that day was very strong. Of course, that was what actually the market had to go through. That was actually what the market had to go through to be able to boost through that resistance, right? So that resistance alone will now have to turn to support right here, okay? Turn to support. So the market is actually sitting on the support. So of course, this information is what we were able to deduce, right, or drawn out of the H4 time frame. So drop down to a much lower time frame. Because of time, I'll just go straight to 15 minutes. So such that we can be able to see that same thing, right? See that same thing. So as you can see, on the 15 minutes, it's very glaring, right? That the market is observing a support, So we are on higher, we are on an upward trend on the H4 time frame, as you can see. The big bond is seeing upward trend on Euro USD. Upward trend meaning that the Euro seems to have more strength than the dollar. That's as simple as that. Euro-based currency, dollar quoting currency. Of course, it seems to have more strength than the dollar. Then, of course, on this 15 minutes time frame, the time frame that is meant for small money. So write it down. 15 minutes time frame is a time frame designed for small money. Hello, sir. Who are the small money? Small money are those that have hundreds of dollars in their account. I mean, if you have $100 in your account, you're small money. If you have $500, you're small money. Okay. Then, of course, the trading success is about increasing. Even in that category of small money, you can increase your capital from maybe $200 to $1,000, from $1,000 to $2,000. So if you want to do that, man, I'll drop my number at the end of this section. You call me such that you can get some maybe a one-on-one session, and of course you get to increase your capital that will guide you on how to do it. Okay, so we are actually on the support, as you can see right here. We are actually on the support. So on the support, we are not going to sell, right? So look at my moving average period. This is 21 period that is actually trading below my 50 period, right? So that's actually a bearish sign on this 15 minutes time frame, right? That, of course, the market was actually going down. But guess what? It is on the support. I wouldn't want to sell on the support. Rather, I would want to buy, right? Remember, the higher time frame is showing us upward trend. But if I want to buy, hey, I wouldn't want to buy when the knife is falling, right? When the sword is falling down, something like this. So you can see right now, I am actually on a fix, right? I am on a fix either to buy or to sell. So whenever you're on a fix like that, I mean, you're getting two opposing signals, both sell and buy. The next thing that comes to your mind is wait. You wait. You wait for the market to react and show you what it has intended to do. Okay. So this is the point where we get to wait and wait for the market to show. Of course, that is the patience that is needed in trading, right? Of course, and another word for PEEP means patience is power. PEEP, write it down. Patience is power. Patience is power. What are we being patient for? We want to wait and see the leg of the market. So the market will do something we call market reaction, right? So it will react and show us what it wants to do, right? Whether it can break this support, that means the downward movement is really very strong because it's trying to target some liquidity. So maybe it wants to take out this liquidity, take out this one, and take out this one, right? Such that we can jump into that liquidity movement to the downside. Or wait for the market to take out this high. So there's a high here. The market can take out that high. And if the market takes out that high, of course, on this 15 minutes time frame, we call that a shift in market structure. So by the time we see that shift in market structure, we want to buy. So this is a point where you wait. You wait for the market to lead you. Emeka, wait. Emeka, wait. Ojo, wait. Which other name again? Okay. I think those are the names in my mind. Emeka and Ojo. Wait, we don't really have Emeka and Ojo right here, so I can use that name. Okay, so I'm trying to refer to you, right? Even princess have to wait, right? Emeka Ojo, they are names for male, right? Princess is for female. So wait. Now that's what we are doing on Euro US, right? So we are waiting to see these two movements whether it can break this support. Remember, it has tested this support several times. 1, 2, 3, 4, 5. Man, it could not break it. Okay, so we are waiting to see where the movement will go. Okay, so if it breaks this high, then of course it is showing us sign of momentum to the upside, right? Of course, to resume the upward trend, So that's for Euro USD. So Euro USD, we're not picking any trade. So I will have to analyze GBP JPY because I have a trade there, such that you too you can pick a trade and of course follow me and make some money. Okay, so let me also do GPUSD because remember it's a custom, right? Don't forget the custom. Don't forget the custom, guys. It's a custom. So we have to look at GPUSD, Euro USD. Those two are the singular most traded currency pair, of course. So GBUSD, of course, as we always do, we have to look at the H4 time frame, guys. If you have questions, get to the comment section. Drop your questions there. You have instrument you want us to look at, get to the comment section. Drop your instrument there. Okay, Endurance, you're saying today is Wednesday that you're already preparing. I've taken you by surprise now. Endurance. Excuse me. So H4 time frame, let's look at what the H4 time frame looks like, right? So this is H4 time frame, guys. What can we deduce from here? What can we be able to deduce? What can we be able to deduce? So if you look at this H4 time frame, you can see that it's kind of looking a little bit funny, right? Right. Yes. It's looking a little bit funny. What we have here is looking a little bit funny. Funny because what can we say here? Say because we have taken out this high, we have taken out this high to form a very strong high upward. So that means we are seeing strong momentum to the upside. But wait a minute, the market dropped very strongly to the downside, and of course, take out this low to form a new low. Wow. So what's happening here? Are we going up or we are coming down? Now, if you look at my moving averages, as you can see, these moving averages, my 21 period moving average is fanning very beautifully below my 50 period moving average. Of course, it means that the market is going down. That's for the H4 time frame. So sometimes when you analyze the market, you get into what I call analysis paralysis. So write it down if you're hearing it for the first time. Over analysis gets into analysis paralysis. So at the end of the day, to not be like, the market wants to buy, it wants to say, hey, wait a minute. The way to get out of analysis paralysis is to get what we call a bias, right? Get a bias. So by the time you get a bias, you will ignore the temporal movement of the market to the opposite side of a bias. You ignore that one. You wait for the market to actually align to your bias, okay? So most of us get into analysis paralysis. Now, of course, we are looking for how to come out of it. For example, what the analysis we did on Euro USD ended up in what I call analysis paralysis because, hey, by the time you get into analysis paralysis, the next thing you have to do is that, hey, you have to wait. You have to wait. So it is analysis paralysis that gives birth to waiting in trading. And waiting is very important. So, of course, when we arrive at Euro USD is analysis paralysis, so we have to wait. So, when you analyze the market and you get to a point where it is now analysis paralysis, I mean, the market is giving you both buy and sell signal. What kind of thing is that? You have to wait for the market to show you its leg, right? To prove to you that, hey, I am more on the upward direction. Hey, I am more on the downward direction. That being said, let's go back to our Euro US, our GPUSD. So for GPUSD on the H4 time frame, we are still powerfully going up, but I'm seeing some bias shifting to the downside. Of course, it has to shift because remember we have taken out this low, very important low, because this low is responsible for taking out this high in recent time, right? So this low is responsible, this low, so these are the lows, right? So these are the lows. See, this low is the low of last week. So guys, can you hear me? Okay, I'm sure you can hear me right now. So so we'll switch over to a 15 minutes time frame so that we can have enough time to analyze other major instruments, right? So in the 15 minutes time frame, we are seeing a very big drop right here, right? A very big drop, very big drop. So what can we do about this big drop? So I think we're going to take advantage of this big drop right here. So on the 15 minutes time frame, you can see that for today, we are having a bearish bias. I mean, the market have successfully traded below the opening price of the day. It has successfully traded below the lowest price of yesterday. So the market have taken out that low. So that means for the short term, for the short term movement, for an intraday perspective, I'll be looking at for a selling opportunity, right? For intraday perspective, I'll be looking out for selling opportunity. So that means GPUSD is actually leading Euro USD, right? So what we're expecting to see on Euro USD, we started seeing it on GPUSD, right? So the market have traded below the opening price of the day, traded below the low of yesterday. So it have taken out the low of yesterday. Taking out the low of yesterday is a sign of bearish momentum, forced to the downside. Okay. So for me right here, if I enter sell right now, that would be an aggressive sell, right? That would be an aggressive sell because when the market has moved a very good number of pips, let's measure it. The market has already done 43 pips to the downside, right? Okay. So with a very strong movement all at once, a very strong momentum to the downside. Uh, Normally you would want to wait for a retracement, right? Because if you enter right now, you are trying to say the movement should continue from here and just continue downward. Of course, the market doesn't move like that. So it will need a little retracement for it to push more to the downside. So this is the retracement level for you. So if it does this retracement that you want to sell, so this one is already giving us a bias, right? So we are already having the bias very clear, the direction very clear. So a little retracement you want to sell. That retracement gives you a more premium price. Retracements on the downward movement means market to offer you premium price. Remember, if you want to sell, you have to wait for a premium. Don't just jump in and sell, wait for premium. If you want to buy, don't just jump in and buy, wait for a discount. Discount is a lower price, premium is a higher price. So this retracement we are waiting for is actually a premium price, guys. So wait for a little retracement. You know why? The reason is very clear, right? So since we have taken out all of the liquidity. We took out this liquidity right here. Of course, the main one is the low of yesterday, right? So we have taken out this one. And taking out that liquidity simply means break of structure, right? And then anytime there's a break of structure, the market tends to retrace a little bit. Write it down if you're hearing it for the first time. So these are some of the laws or rules in trading. Anytime the market have done a break of structure, we normally expect a retracement. That retracement, of course, is what we call premium price if you want to sell. Okay. So the market gives you a premium price so that we can sell. Please, guys, are we getting value from this? So once the market gives us a premium price, of course, they want to sell. We want to sell. Now, this selling is for a short-term movement, right? It's for a small money perspective, right? This selling is for a small money perspective. Okay, so if it retraces, then I would like to sell because I've seen momentum shifting to the downside. Now, I think we have done Euro USD, GPUs. I would like to do GBP, JPY, and of course, gold. I like to do gold because I can see gold is running upward. And the area where I would have loved to enter has even passed, but I would still like to enter. Let's do gold. Let's do gold real quick, right? Now, I will not wait for you to suggest gold. I want to do gold. Of course, if I check the comment section, most of you must have already. Let me check comment section. Since I've done Euro USG US, okay, somebody say US 30, okay? Who's the person that say US 30? He say we should do cutting. Okay, that's beautiful. Then Hawaii US 100. Okay, US 100 is my instrument. Uh, then Felix. Felix, I'll not read your comment. uh, you say you always jovial. Okay, okay. So let's do GBP, GBP. Let's do gold, right? Let's do gold. I'm seeing gold. Gold is giving me something that I like. Eh? I'm seeing gold. Gold is giving me something I like. So on gold, of course, gold. Some of you can guess, right? Okay, okay. Let me use gold to entertain you this morning. Okay, okay. Please, let me know what kind of direction, what kind of trend are you seeing on gold? Get to the comment section. Let's do that one real quick. Real quick. Comment section, please. At this point in time, what kind of direction are you seeing on gold? What kind of trend are you seeing on gold? So these two things, direction and trend, whatever, anyone you understand. Which of them do you understand? Is it trend or direction? Okay, okay. Mr. Kende is saying strong upward momentum. Beautiful. So, Mr. Kende, for a strong upward momentum, what kind of trade or what kind of bias are we envisaging, right? What's our bias? Mr. Kende says strong upward momentum. Man, I love those words. Those are strong words that you combine together. Then, of course, Felix is saying it's upward trend. Beautiful, beautiful. Thank you very much. So, guys, if you see upward trend, what should you do? What should you do? What should you do? Of course, I know some of you are already doing some dangerous things there already. Okay, but take it easy. Take it easy. Take it easy. Now, if you want to trade gold, for those of us right here that wants to maximize profit on gold, okay. So by the end of this call, I'll drop my phone number. You call me. Okay, you need to top up your account, right, before you trade this gold. So that any small boom, boom, boom to the opposite direction, so that it not create a very big dent on your account, right? I mean, for most persons, one of the reasons why they are afraid of trading gold is that if gold move against their trade, they are buying. Oh, okay. See what I mean? See the example. Can you see this small red candle, right? Uh-huh. So if gold move against their direction for this small red candle is 80 pips, man. One pip, $1. The market have moved 80 pip. That's $80. How much is $80? $80 is about 130,000. So guys, if you're trading 0.1 and go just move boom, 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 just this small red candle. Some of the traders will just pack up their kaya. You know what I mean by kaya? I mean their load. You just pack up everything and shut down the trade. Say no. Hey, you were doing the right thing by buying, but just because of this small move, you decide to run for your life. No, it simply means your capital size is the problem, right? Your capital size is the problem. So, guys, by the end of this call, if you want to top up your account, I'll drop my number. You call me, okay? I'll direct you on how to do that and give you some one-on-one coaching too, okay? Okay, okay. That being said, let's move on with great speed right now, great speed. So this instrument is strongly going upward. So whenever you see a strong movement to the upside, the next you want to look out for a support, what I call a localized support, right? I mean, you want to look, by all means, look out for a support, right? A support is a better place to buy, a better place to buy. Why are we looking out for a support? Of course, most traders are actually buying on a support, right? Most traders are buying on the support. So what you need to do, by the time you look out for a support, it gives you a support is a place where demand exceeds supply. That's a very simple way to explain it. Demand exceeds supply. Demand exceeds supply. Or buys exceed sales. I think that one is the best way to put it. So write it down. Write it down very fast. The support is a place where demand exceeds supply or buys. I mean, buy order exceeds sell order. That means the amount of traders buying on that level is always outnumber the global amount of traders selling respective to that time frame. Man, I've given you a textbook definition. Oh my goodness. So guys, so there's a support right here. There is a support right here. So if you want to look at for this local support, then the time frame must be your friend, right? So you must learn how to switch from one time frame to the other time frame. because when you go lower the time frame or when you go down the time frame, you get to see more localized supports. Of course, the time frames are for detail of the market, right? So the lower time frame are details of the higher time frame. So if you want to see more detail what is happening on the market, guys, make the time frame your friend. We call that a top-down analysis, a multi-time frame analysis that exposes the market to your that exposes the market such that you make profit from every move, right? From everything you do, because you're looking at the key areas, right? The key areas where the market cannot deny your trade. Okay, so I would drop down to 15 minutes time frame. Of course, you should be expecting more, right? So this is one. Come on, guys. Trading is sweet, or if you understand it. So if you watch this area, if you notice the market move very fast to this area, this top right here, this top. Then if you extend this top to the left hand side, right? Sorry, to the right hand side, you will notice that area became our support, right? So guys, we have a support. This support is very close to the market price. So if you're feeling that, hey, if you're having the feeling of FOMO, we call FOMO fear of missing out. So if you're having the FOMO, if you're having the FOMO fear in you, right? Fear of missing out. So you look out for a support that is very closest to the market price. I mean, such that if the market retraces to this level, hey, opportunity to enter, right? So that's one area. So I'm trying to create a different area of support where you can take advantage, right? Where you can take advantage of the market. So this is another one. So this is another one. So this one is actually in form of an order block that was violated, right? So it will not turn into a support area. So guys, whether I like it or not, this gold is strongly going upward. Okay, so we are just looking out for when to enter. Now, if you like, you can enter at this market price. But all of this thing I'm doing right here are areas where you can be able to enter at a relatively discounted price. Of course, who doesn't want discount? Everybody likes discount, I can tell you that. So that means let me enter where the markets can easily give me profits. Because if you enter at this top right now, any small slight movement to the downside, that becomes a drawdown on your account, right? If it moves like this, that's about really, is that up to 64 pips? Let me see. You see, that's up to 60 to 70 pips, right? So you want to enter, if you want to enter at the very best possible point. So these are the things you do, right? So remember, we want to buy. Don't let today pass you by without buying gold. If not, you will regret it, right? You will regret it. So gold, the gold I'm seeing right here for today, it should be able to take out this high. Remember, it is strongly going upward, right? So it should be able to take out this high. So this high becomes your take profit level. This high becomes your take profit level, right? So a little retracement to the downside, man, you want to jump in with the buy. Don't forget this. Don't forget it. And when you make profit, okay. So let me know you have made profit, right? So that we can rejoice together. So guys, this is actually area where you can use as your stop losses, right? So you can use this area as your stop loss. So if the market breaks below the low of today, that becomes your stop loss, because you also need to have stop loss in mind. So guys, this is it for gold. I think we have done good right here. So all our bias is pointing buy. We don't really have any issue with analysis paralysis, right? Even yesterday it was buy. Day before yesterday it was buy. Look at it now. Yesterday it was buy, day before yesterday it was buy. If I yesterday it gave us a reason to buy because of this drop. Once the market drop, you notice this drop, you notice this drop. Let me zoom in to make it bigger. You notice this drop right here. It dropped towards a support, right? Of course. So I can extend this even backward. I can extend this support area even backward. You notice how it dropped towards a local area of support, right? Before it pick up from there again. Of course. Now, this drop is actually a discount, right? So the market provided discount for new traders that would like to enter. The market is so kind. But sometimes the market can punish you if you don't understand the kindness, right? Of course, it's so kind because you say, hey, wait, I'm coming down. I will give you some lower price. You enter. So wait for the market to issue you some low price, to offer you some low price, to give you sell side liquidity, to take out the sell side liquidity, right? So of course, if it's going up, it needs to take out all of these lows, of course, to have more momentum to move upward. So guys, I've given you areas where you can buy here, you can buy here. These three areas are areas where you can buy. So guys, that's it for gold. I think we have done gold right now, but I would like to do GBP JPY, right? I have a trade there. Let's look at what we can do. GBP JPY, then I'll take your so this is GBP JPY, right? So on the H4 time frame, so why am I buying at this very point, man? I'm still very bullish, right? I'm still very bullish. So most of you can recall that, hey, I've been very bullish on this instrument for some time now. And the reason is not far-fetched, right? It's from what the market is doing. The market is showing us that the big money is still very bullish, right? So as you can see, so I have to go to H1 time frame to go and look at what the big money, so daily time frame, right? So on the daily time frame, you can see this strong momentum to the upside. So the question is, do you think the volume or the millions that are pumped into buying the pounds against the yen, do you think those money have all been closed? Have they all been taken out? No, people only take out some part of their profits, right? Then continue hoping that it goes up even further. Okay, fine. So of course, if all the money that is buying is taken out, you will expect a very big fall. You expect a very big fall because it's a zero-sum game. You expect a very big fall. So it is the buys that are there that is still keeping it standing. For example, this is where it started from. It started from this low, right? It started running up to this point. So let's even measure how many pips up from here to that point. So from here to where it is right now, that's about 1,530, right? So the market ran 1,530 pips to the upside. So why is it not falling heavily to the downside? Hey, that money that push it upward is still there holding it. So guys, that money is the big money, right? It's the big money. It's the big money. So what I do is I wait for the market to give me some level of discount. If market gives me some discount, then I'll buy. Okay. So guys, you can join me on this trade also, so that you'll be with me when when the market is declaring profits. You also participate. Okay, so guys, you can join me on this by let me look at the time frame that you recognize very well. So let me drop down to a lower time frame. So 1 hour time frame. Let's see what it looks like on 1 hour. So you can see this area has been a very strong level of support. Of course, the market has been going sideways, right? So throughout a week before last, just sideways movement. Then, of course, last week also, it gave some sideways movement. But wait a minute, look, there's something here. There's a spring here, right here, right? There's a spring. So what is spring? Spring is an opportunity. Spring is an opportunity. So this is spring. This leg right here is spring. It's like the Wyckoff, the Wyckoff principle or the Wyckoff trading strategy. So the market will have to do a spring before it moves over to the opposite direction. By spring, I mean this long movement to the downside. You notice that this leg, it cleared out the low, the liquidity or the low of this week. I mean this leg to the downside. Please, I don't know whether we are seeing it very well. Okay, let me leave it this way now. See what I mean? This long movement to the downside took out the liquidity all of these lows, right? And even took out the liquidity. So, I mean, it traded below the low of the previous week. That one is noted. It also traded below the low of the week before last, right? So, because if it was this low is lower than this low, right? Then just immediately, it traded back upward and traded above the high where it came from. What does it tell you? Oh my goodness. What does it tell you? That this leg does not really exist, right? So this is an market engineered movement, right? So this whole movement downward came downward to clear out all of this low and resume upward. So guys, we are still going up. We are still going up. So if we're going up, we look for opportunities to buy, guys, opportunity to buy. So I will drop down to 15 minutes time frame. They will look for where we get opportunity. So opportunity to buy is where my trade is already, okay? So look for opportunities around these areas to buy, right? So I already have a buy, and of course that trade is going up very well. So this market that is coming down, this is what most persons do. That previous analysis I did, they don't do it. They just look at this 15 minutes time frame and see one red candle, see the second red, see the third red, see the fourth red, they will enter sell. Oh, guy, if you are trading like that, you have to stop it. That means you're only trading by looking at a single or 2 to 3 candlestick on the lower time frame. No, you're setting yourself up. You don't trade like that, right? So we want to look, we are still bullish at this point. We are still bullish at this point. So we are looking at for opportunity to buy. Opportunity to buy means you first see the first bullish candlestick. Of course, that's already giving you opportunity to buy. So you don't buy when the candlestick is showing red like this, right? You wait for the first bullish candlestick before you can buy, right? Or you wait for the market to do what we call a change of character, the market to trade above this high. But guess, but you just generally wait to see some bullish signals around this area. It can be a bullish engulfing. So by the time you see bullish signal that you want to buy, okay, they want to buy. Otherwise, you just enter exactly where I've entered my own trade, okay, so that when the market is giving me profit, you on your own, the market is giving you profit. Okay, of course, that's one way to copy our own signal or copy our own trade. Okay, so you have entered where we have entered. When you see profit, it means when we're in profit, you too are equally in profit. So most people say, Emmanuel, how do I follow your trade? This is how you follow it now. Mm. All right, guys. I think we have done a lot of instruments. Of course, we've gotten real value from it. Okay, you say we should do US 100, right? US 100. The comment section is full, oh, man. The comment section is full, man. It's really full. But let me take that US 100 that you said we should analyze. Of course, you already know my take on US 100. If you have been following us up on this, so this US 100. No wonder you say we should do US 100. Okay, US 100 on the H4 time frame. Let's look at the general perspective view. So you can see my 21 period moving average and my 50 period moving average. They are fanning out beautifully to the upside, right? So this is a sign of a very strong movement to the upside. Guys, what do you think? Very strong movement to the upside. What do you think? What do you think? Are you thinking what I'm thinking? Are you thinking what I'm thinking, guys? Where's my US 100? Okay. So, of course, you're thinking upward trend, right? So, 15 minutes time frame, guys, because of time, it's already past now. 15 minutes time frame. Now, whenever the market is strongly going up, your bias is to buy. But then you don't buy anywhere. You wait for a discount or you wait for the market to drop to support, right? Or you wait for the market to trade to the opposite direction, giving you more opportunity to make bigger profit when you enter the trade. Okay. So we saw this big drop yesterday, right? We saw this big drop yesterday. So this is this big drop. You can see this big drop, right? So what do you think we were expecting when the market was dropping? Of course, that drop signifies that the market is trying to offer discounts. So you should know when the market is offering discounts. And then, but the question will not be how much discount is a good discount. Man, that's a discussion for another day. But write it down so that when you see me, you can ask me that own question. Question like Emmanuel, how much discount is a good discount? If the market give me a discount of $50, should I buy or I should wait for a higher discount of $80? Of course, $80 is bigger than $50. Or I should wait for a bigger discount of $200. Who doesn't like a bigger discount? So the question is, so write it down, guys. How much discount is a good discount? I don't know about you, but for myself, I normally wait for bigger discounts, right? So I mean by that, I mean when the market drop just a little bit, that's a discount. The market dropped again. Oh God, don't you think it's a discount? But the market gave another discount. So the dip is getting deeper until we get to deeper life. Okay. Let's come back. Now, all of these are what I call discounts, right? So this is one discount, this is another discount, this is another discount. Of course, where is the best discount? Now, sometimes it is hard to 100% get to know the 100% best discount, but we can use the left hand side. So the left hand side of the market gives you the best. I'm already revealing the secret. Okay. Let me know. You call me. You let me know so that I can tell you which discount is the best discount. So we saw that this fall right here fell toward this level, right? Fell towards this level. But if you notice, it actually bruised this other high, right? It bruised this other high. Of course, the later is greater than the former, okay? So if you understand what I mean. So this was the one it respected, right? Before it started going up. Okay. So guys, I'm bullish on this instrument. I'm bullish on these instruments. So of course, you know what I always do here, right? So I would like to jump in with a buy, right? Now this is my instrument. I'm telling you. So I think I would like to draw the curtain here, guys. Thank you very much for joining me on this one. It's past 9 already. So this is actually 1:3, right? So not bad, because I'm targeting the market to take out this other high. So guys, thank you very much. My number is 090. So write down my number real quick. 090-2626-4507. Let me type it for you. 090-2626. So 090. I'm typing at the comment section right now. 2626-4507. You can call me Odogu Emmanuel. 090-2626-4507. Emmanuel is my name. 090-2626-4507. So guys, you want to top up your account, you want to get to the VIP level, you want a chance for a one-on-one session, of course, why not? Top up your account. Call me right away, okay? For those of us that like to scalp, I think this is already giving us profit of over $2,000. Sorry, 2,000. Guys, thank you very much. Bye for now. Join us tomorrow for another exciting session, okay? Bye for now.